Hi everyone, Robin Spiers here, and my guest today is Jeff McGinn from TMG The Mortgage Group. Welcome, Jeff.
Thank you.
Thanks for coming. The reason I've got Jeff on here is we've got some changes coming down the pipeline with respect to mortgages, and I wanted to bring an expert in to shed some light and let you guys know what's coming down the pipeline. So, Jeff, what can you tell us?
What I can tell you is that starting January 1, 2018, the federal government has implemented a policy that says all mortgages, whether you're high ratio or conventional, you will have to qualify at the current contract rate of your particular lender plus 2%, or the 5-year Bank of Canada benchmark rate, which is set at 4.99%, so the higher of the two. So to give you an example, is if you were buying a house for $525,000, you were putting 20% down payment on that house, so about $105,000, you would have to qualify at 4.99% interest rate. Now, in that particular example, your payment, or the 4.99% payment, would be $2,440. It means you have to qualify or verify to the lender that you can absorb an increase in interest rates. Now, actually, in today's market, your payment is probably more like based on a 3% interest rate, which would be around $1,987. So the actual payment would be $1,987. You have to verify that you could, if interest rates shot up, make the payment on the 4.99% if you had to. And in our example, it's a $453 difference.
Right.
And so federal government and lenders want to know that you can absorb that so that they don't end up with more houses that they don't want to sell.
Right. So basically what that means is for someone who was typically qualified for $500,000, as of the time the rules changed January 1st, they're now going to qualify for about $400,000 instead of $500,000.
That's generally how it's going to work. There will be a small decrease in buying power based on these new rules, and it's basically designed to slow down the housing markets in Toronto and Vancouver.
Okay. Well, thanks for sharing that with us, Jeff. If anybody wants to know how this might affect you, feel free to reach out to Jeff or myself, and we'll help show you how it affects you, because it's gonna affect everybody slightly differently, won't it?
It will. And one of the other things that you need to know is there might be a small little window to get a jump on a pre-approval, so that you don't have to worry about the new qualifying rate if you have more than 20% down payment.
Right. So
for your purchase.
In other words, if people are going to buy, now might be the good time to buy if they're planning on buying in the next several months?
Well, not necessarily buy, but get that pre-approval. Go to their mortgage broker, get the pre-approval done, so that you're working on the old rules versus the new rules. Because the new rules, even though they're slated to start January 1, lenders may implement them sooner.
Awesome. Well, thanks for sharing all that stuff, Jeff. Appreciate it.
My pleasure.
And thanks for tuning in, guys. Feel free to reach out to us if you have any questions. Take care.
Bye.